What I like to do is get you in the game. Let's get you into the game so we can start building up cash flow and then build a plan to get you out of, if you want. Some people love their jobs, love their corporate world. But a lot of you that I've talked to hundreds and hundreds of people every year. Actually, probably over 1,000 now, every single year. Majority of people want to build their own legacy, not only for themselves, for their family. So that's really what our mission is, to help those people. And we also help people that are high paid W-2. They're making $500-600 grand a year, have no tax write-offs. The best tax strategies out there is for somebody to own a business, because you can write off so much, and you can set up self-directed retirement vehicles. So I think, just opening your mind to that is huge. Wherever you are, whether you're a person that's making 50 or 60 grand a year as a school teacher, and you're living paycheck to paycheck, let's get you in the game. There's a lot of franchise models under $100,000 all in investment that we can get you in. So don't feel overwhelmed because you're not that far off. Keep the credit good. As long as your credit score is good, you have outside income. That's what SBA is all about, helping everybody. All right, so you're all here to get capital that you need for your business. We're going to dive into SBA financing and much more. And remember, as we're going through, feel free to put questions in the Q&A. I'll go through these slides fairly quickly, give you a lot of a good overview on business funding, on the SBA 7A, 504, and more. We want to try to make business ownership easy and accessible to everyone. My mission is to help, over the next 10 years, 1 million people go from being an aspiring business owner to being a successful business owner. And that might mean on a webinar, or maybe they heard me on a podcast, maybe not helping one-to-one, but I'd like to have that much impact with my career. So we're going to talk all things SBA financing. We will touch on some other financing options, but really this is focused on SBA financing, which is, in my opinion, the ultimate funding vehicle out there. And this can be used for startups, franchises, business acquisition, business expansion, construction projects, anything that's deemed eligible as far as an operated business. Now, you can't use it for investing in multifamily and what they consider passive investments, but self-storage, they consider that a business. So anything that's construed as a business that's not ineligible is most likely eligible for SBA financing. Our company, we help in two ways. We help you find your ideal business, and we also help you fund your ideal business. So at the end of the day, we're all here because we want capital to either grow, expand, or start a business. And hopefully we answer from a high level perspective today all that and more. We also have opportunities not only for franchise startups, we also have off-market inventory for franchise resales as well throughout the nation. So if finding a business is challenging, we hope to help you there too. So essentially, our mission is to help you identify how the SBA process works, what you need, are you eligible, how do you put money together, even if you don't have the down payment. We call it the equity injection. So really, it's perspective. Like, what do you need? From a bare minimum standpoint, I would say rule of thumb is a 680 credit score or better, outside income that supports your outside debts and lifestyle, or debts at least, and a decent resume, and then an eligible business that's SBA financeable. So why this workshop? Because we know out there that people are struggling to find dream businesses. They're confused about the financing options, and they want to scale but don't know how to fund the particular businesses. So who's this event for? Aspiring entrepreneurs, buy your first business with confidence. Existing business owners, expand, scale, thrive. Franchise seekers, get into a proven business model with smart financing. Business owners needing working capital to get them through some cash flow, maybe seasonality, or of course expansion. By the end of this workshop, you'll know how to fund a business acquisition without draining your savings, how to get 100% financing for expansion, how to launch a franchise with low money down, how to secure working capital and equipment financing like a pro. All right, so we're going to dive into business acquisitions first here. So business acquisitions are appealing to many people because the thought process is I can buy an existing business that's already producing cash flow. So for the purposes of illustration, when you're looking at a business acquisition, let's say it's $1 million for the purchase of this manufacturing business or e-com business or insurance business or self-storage building or whatever it is, right? The highest leverage financing you're going to get is SBA financing. There's two loan products. There's the SBA 7A and the SBA 504. The SBA 504 loan is going to be only used for real estate and heavy machinery. That's it. The 7A can do real estate and everything, and it can do blue sky, or it can do what we call airball. So if you're buying it like a business that doesn't have collateral, that's fine with the SBA 7A, as long as there's cash flow. It's a cash flow based lending product. So on $1 million acquisition, the bank, credit union, or non-bank SBA lender can lend up to 90% or $900,000 for that acquisition. That's assuming that the business has strong cash flow. So how do we tell if it has strong cash flow? We don't just look off their pro formas or projections. We actually need to underwrite off of the business that you're looking to acquire's business tax returns. So we'll need to gather at this point. They might not have 2024 filed. So today we would need 2021, 2022, and 2023 business tax returns. And we would need the end of the year profit and loss statement for 2024. And we would need a balance sheet from the selling business. From there, we spread the financials and we do a cash flow analysis. And we see, is there enough cash flow to support this $900,000 loan? If so, we're in good shape. If not, are we close? Can we structure the offer a little bit different? Maybe we get some seller financing. Oftentimes on a business acquisition, we look for seller financing. Not all the time. Now, you have to bring in $100,000, which is 10%. That $100,000 could be a gift from a family member. It could be, you could bring in an investor partner that owns a portion of the business, right? So maybe they own less than 20%, and then they don't have to go on the loan. They don't have to be a guarantor of the deal. So oftentimes you'll see that happen. Just like in house flipping, you have the house flipper and they'll bring in an investor that does some profit share with them. Similar type of business model. That down payment or equity injection can't be borrowed funds. Well, it can be in certain circumstances, like if you owned a house and you put a HELOC, an equity line, you could use that. But if you're getting a straight borrowing money from another loan, you can't do that. It can't be borrowed funds. Now I see people getting creative around that subject, but if they know it's borrowed funds, it will be ineligible. The other option is you can have the seller carry a portion of that $100,000. Some banks want to see at least 5% skin in the deal from the buy side. Some of them say, hey, as long as we have 2.5%, we're good with that. So in theory, the seller could carry back, and we call it carrying it back on full standby. That means either no payments for the term of the loan, it can accrue interest though, or it's at least interest only for the first 2 years. So there's different ways of structuring the standby. But in that case, I just closed on $1 million business with $25,000 out of pocket. Now, I could ask my friend Bill, will you invest in this deal? I'll give you 5% ownership for $25,000. So in theory, you can structure no money down deals. Now, it sounds great, right? You're still, the borrower or the guarantor still needs to have a good credit profile and the deal has to make sense. But you can be extremely creative on the way you structure these deals. I see people structuring deals where they're buying really large businesses, like service-based businesses. I was talking to a gentleman the other day and he was buying a home service type of business that's doing over $4 million in top line revenue. And he might have had 75,000 to his name, but he was able to bring an investor in that was going to bring in the $500,000 equity injection. So, and he was going to put in about 50 grand. So you can be really creative. That business is spitting off enough cash flow where he can quit his job and now, take some of the SDE or the owner salary out of the business. And so the answer is if you could find these businesses and structure the deal, you can go from employee to business owner if you wanted to, right? There's potential. I see people doing things like that. So with SBA financing, just like I said, it's 90% financing. If it's a business acquisition with no real estate, it's going to be a 10-year term. If the majority of the business and there's real estate involved, if the majority of the purchase is real estate, you can amortize the loan as long as 25 years. Seller financing is okay again. We just talked about that structure. And there's also alternative lenders if SBA doesn't work. There's ways of structuring deals, but SBA definitely is my first choice on any of these types of business acquisition structures. There's also non-bank SBA lenders, which are a lot more aggressive in some cases. So they're actually underwrite in-house the SBA and the file never ships to SBA. If they're a PLP, a preferred lender for the SBA program, for the 7A at least, that file never has to go to SBA. They just pull a case number, that's it. So we usually always work with PLPs. And then I taught you about some of the creative hacks to buy businesses using other people's money and leveraging SBA. And there's lots of other strategies as well, but those are just some of the major ones you'll see. So if you have an existing business, let's just say you owned I don't know, let's call it a CPA practice. You're a bookkeeping practice, CPA, whatever it is. And you've been in business for a couple of years and you have good cash flow. You can actually get 100% financing to buy a building. I think actually I have another slide, that's really a replacement deal, but you can do that. You could have an HVAC company or any business, and let's say the competitor in the next town over is selling their HVAC business because they're retiring. If it's in the same NAICS code, North American classification, it's basically how they classify the businesses. If it's the same business classification, you can do 100% expansion financing. And that's assuming generally that you have at least 2 years time in business. So as you can see, you can really scale up. You can have up to $5 million in aggregate SBA, and sometimes you can have more in some certain cases, depending if you own multiple businesses and other factors. So yeah, going back here to your solid business returns, it's got to be profitable, right? It's got to make sense that you're going to expand. And strong industry and market position, right? It's got to be a solid business model, and everything always has to make sense. If it makes sense that you're growing, even if you're not quite at 2 years of time in business, but you can show that you have the trajectory, we can sometimes get 100% financing even without 2 years of business tax returns. So franchise financing. Want to own a franchise? Here's how you fund it. Franchise financing. So remember, a lot of these are startups, meaning it's not a franchise resale. So it's projection based. So there's something called the SBA directory, which isn't around, but it's still around. And that was a list of approved franchises per SBA. So now that it's discontinued, some banks still look at it. Generally, we're able to fund 80 to 90% of the total project startup costs. It's franchise fee, working capital. They're basing it on the same thing. You have good credit profile, you have outside income that supports outside debt, and it's an approved franchise, meaning that there's a little caveats when it comes to what franchise it is, but generally anything, any loan amount sub 150, we have a bank that will do 90% on a franchise startup. And generally over 150, most banks are usually around 80%, although I do have a couple that will go as high as 90% on a startup based on projections. So what do you need to qualify? Same thing you would on a business acquisition. Good credit, outside income that supports outside debt, and a good franchise model. It's actually pretty simple. A lot of people think SBA is really complicated. It's a lot of paperwork, but it's really simple. And we can usually assess in a relatively short amount of time what what type of franchise, what the best financing structure would be. So I always want to know what franchise you're looking at, and then ask you a few questions. How much in liquidity do you have, your credit score, and a few other questions, so we can assess what program would be the best for you. So obviously there's some other ways to structure it. So one thing about I want to make clear on an SBA 7A loan, if there's no real estate, that means there's a collateral shortfall. So anytime a loan amount is over $500,000 and there's a collateral shortfall, we have to look for additional collateral. So if you own a rental property or a primary residence, they would have to put, per the guidelines, if the loan amount is over 500,000, they would have to put a lien on that property. Hopefully they change that rule, but now if you don't have any additional collateral, they can still do the loan. So don't worry if you don't own a home, because they can still do that, but it's a guideline. Now there's certain states like Texas, which has a law called the Texas Equity Law. You couldn't put a lien on a primary residence. It's against the rules of in just specific to the state of Texas. So there's lots of other ways to finance a franchise. You can use a combination. If you had an old 401k, there's something called a ROBS rollover. Some people use that as their down payment in conjunction with the SBA. Sometimes they have enough money in their retirement account to do the rollover. So that is eligible if it's an eligible retirement account. You can use HELOCs for your equity injection or down payment. You can get pretty creative. So working capital loans, cash flow is king. Well, they did roll out a program that if you have been in business for 2 years and you show good top line revenue, even if you're not profitable at this point and you have good credit, you can get working capital loans up to $150,000, which is pretty amazing. I do think there'll probably be a high default rate on those, but since the last 2 years, there's about 5 or 6 different banks and non-bank lenders that we work with on these small working capital loans. But traditionally, most banks are going to underwrite for a debt service coverage ratio of 1.15. So you have to show cash flow. But on those smaller loans between 100 and 150, they do have this express program, which is pretty unique. I don't know how long it'll be around. So working capital loans, we're going to ask for the same thing: 3 years of business tax returns, 3 years of personal tax returns. We're going to ask for a debt schedule, personal financial statement, balance sheet, and year-to-date profit and loss. So the paperwork is all pretty similar. Just depends if you own a business or you're starting a business. There's also unsecured business lines of credit. There's revenue-based loans that are based on revenue. Those are all usually more high cost, especially revenue-based loans. Those are more expensive, but sometimes we need cash fast, and we're willing to pay a little bit of a premium to get that money faster. There's also invoice factoring. There's also purchase order financing. So there's a lot of ways as you're growing your business to get the capital you need one way or the other. There's MCAs, merchant cash advances. The other thing we do oftentimes is sometimes you'll want to get into a franchise and there's a lot of equipment, but you might have a lot of equity in a home. So sometimes we'll do an SBA loan in conjunction with equipment financing. So we can pair those two together and break them off separately. So there's ways of being creative. If for whatever reason we didn't want to get a lien on a property, we can break them up and do a $499,000 SBA 7A loan and then do some equipment financing. So we can get very creative there. And then there's equipment you can lease. There's all different types of equipment loans. We don't really need to get into that as much. It depends on the product. Is it a vehicle? Is it machines? What your credit is, what your time in business is. Lots and lots of different equipment financing options. So, ideally we just figure out what is the best overall capital stack for your business. You can leverage equipment as collateral. You can do a lot of cool stuff too. Keeping your cash flow strong. So don't let lack of capital slow you down. There's lots of options. Lenders look for 3 things: credit score, revenue, time. Well, actually 4 things: credit score, revenue, cash flow, and time in business and industry. 5 things. I'm missing that. Sorry. 5 things: industry, credit score, revenue, cash flow, time in business. I need to update that slide. Yeah, here it is. Industry experience and business plan. There you go. I did have it on that slide. Collateral, what's backing the loan? The nice thing about SBA, they're not driven on collateral. Most other lending products are asset-based. So how do you improve your approval odds? Number one is improve your personal credit score, which will improve your business credit. Most of these loan programs, especially the SBA for loans under 500,000, most of the lenders use what's called an SBSS credit scoring model. It was designed by FICO specific for SBA. It's instead of personal credit can go up as high as 900 credit scores or 850. It's a 0 to 300 type score. And it uses the same factoring usually as similar to personal credit report, but they also pull in the business data as well. And they even do that on startups. They'll pull in the entity, the business name and entity. Although even if it's a new LLC, you're not going to have any data on that. So you're having personal credit is always key. We talk about that a lot. Look, it's so important to have credit that is in the name of your business. You might personally guarantee it, but when I charge up these lines of credit I have in my businesses, in the different business entities I have, they don't reflect on my personal credit because we know utilization is over a third of your credit scoring. I hadn't missed a payment in a while, but I charged up my utilization into 80% when I was flipping a house a while back. Scores went from 720 down to like a 580, right? So you always want to be, you want to prepare now to build this good personal credit score. So when you go into a bank and you open a new business entity, off the bat, even without revenue, they're giving you $20,000 and $30,000 credit cards and lines of credit that are in your business name. And I know because it works for me. And then over time, once you start depositing money into those business accounts, they start giving you $50,000 limits. And then they, some of the credit cards I get now there's no limits on them. So I really value my personal credit because I know I can leverage. As long as you're leveraging good debt to take advantage of opportunities, then it's a good thing. But if it's for you to go buy something like that's not going to be of value in the future, it's just more for fun, don't do it unless you got a lot of money coming in. Strengthen your financial statements, know your numbers, have up-to-date P&Ls. I tell you, too many times I'm dealing with somebody looking for SBA financing. They don't have a balance sheet. They don't have a profit and loss. You need a good bookkeeper. And I personally would never do any of that. I hate bookkeeping. I hate anything with a spreadsheet. Outsource that. It's well worth it. Position your business as a low risk to lenders. So industry, your credit profile, how you have everything packaged up. You want to be 5 steps ahead, even if you're not ready to buy a business. You want to start thinking about getting yourself financially ready. It's not always just about securing debt or financing. It's about getting the best terms that are most advantageous for you and understanding your options. That's what we try to help people do, is understand what the best options so they can strategize and think long-term, not just the immediate, I need working capital now, but what's the big picture? How can we best position the capital stack to make it work for you? So going into this, of course, we want the lowest interest rates we can. We want longer repayment terms because that usually means our debt payment, our monthly payment's a lot lower if it's longer amortization. Of course, we want to avoid personal guarantees, but when you're signing most financing instruments these days, they all have personal guarantees, unless you're doing agency debt for multifamily or some of those like Fannie and Freddie for large commercial properties or life insurance company for real estate deals. But most business loans are going to have personal guarantee. SBA, for example, anybody that owns 20% or more, you're signing a personal guarantee. But you can if you build a big enough business profile, you can get unsecured, unguarantored financing. So it is possible. All right, so going here, the path to success, to funding success. Find the right loan, SBA, bank, alternative lenders, get a plan. Prep your financials, get lender ready. apply with confidence, position yourself for success, negotiate like a pro, secure the best deal, fund and grow, use the capital the right way, and rinse and repeat. The nice thing about what I do, the majority of SBA loans, the majority, not all the time, but I would say a big chunk of it, I'm not charging a fee because the banks and the credit unions and the non-bank SBA lenders I work with pay a referral fee. So my services to you are often free. They're value add because I know how to navigate. I know I can take the same deal to 4 banks and get a no from 3 of them and a yes on the 4th one. I had a laundromat startup deal. The gentleman was leasing a building, like 6,000 square feet, and he had a plan. It was a non-franchise laundromat. The total project cost for the machines and the build out, the TI, working capital was 1.2 million. I was able to fund 85% on with an SBA loan, and he had no additional collateral. So it's really a game changer if you can get into the money game and you can use it in the right way. So we help startups, we help business expansion, we help people find businesses, we do all that fun stuff. So talking a little bit more, we can create a personalized funding strategy for your business. We have direct relationships with banks, credit unions, non-bank lenders. I'm a member of the National Association of Government Guaranteed Lenders. I'm well networked with a lot of banks. If I'm looking at a deal with real estate, I can give comparison of the 7A versus the 504. Sometimes on larger deals, like I have a $10 million deal, business acquisition with no real estate, and we're capped at 5 million. So we're able to do deals with conventional, so SBA with conventional, and we're able to get them. We're going to try to get, so the way we're structured that deal is we got the seller to carry back 2 million, borrower and investor are bringing in $1 million, and then we're doing a $5 million SBA 7A with a $2 million conventional loan, and there's no capital. I mean, no collateral. So we can help you, formulate a plan. We even have business assessments where we can give you an assessment and it's like a scientific, it's kind of like a disc profile. I call it a disc profile in storage. It helps us scientifically match you with the right business models. Because a lot of times people say, I want to own a business, but I don't know what type of business to own. So we help you with that if that's indeed what you're looking for, or you want to own a business, but you're getting frustrated because you're looking on BizBuySell and you're not finding anything, and you've been doing that for 2 years and you're ready to quit your job. We help people like that. So your next steps to make 2025 your biggest year yet, you can book a strategy call at boeckstein.com/SBA. We just kind of changed it around because we're getting too many calls that we do an open call Friday mornings. So you can go on the site and put your information in. You'll get a link to the Zoom to register if you want to ask questions direct to me. And when we have another channel for people that actually have deals, because obviously if there's a lot of people, we need to service the people that have a deal under contract or about to buy, invest and sign a franchise agreement. And then after we get you on track, we'll help you get that deal to the finish line and get it funded. But what I would encourage everybody to do is, if you look here at businessownershiplaunch.com/proven business, you can go there and you can come to our upcoming event. And that's going to be basically the premise of that event is to buy how to buy a proven business to replace your salary without starting from scratch. So that's going to be a really good program. We're starting this is the first time I'm doing a small group coaching program. This is just going to be the overview and some strategy behind it. But the goal of that cohort is for the people within 90 to 120 days of coming out of that coaching program to have a really clear plan and have identified some business models to basically build their buy box, feel comfortable about SBA. We'd get them pre-approved with SBA and also get them in contact with CPAs and the right people to to be successful and to be able to eventually transition. On top of that, some of you, obviously, it's hard for you to transition. You have small children at home or you're living paycheck to paycheck. So sometimes I like to take a two-step approach. So we're also going to we're going to dive in and we're going to build a plan so you feel more comfortable, right? Some people have higher risk levels than others. But what we're going to try to do is build a plan like saying, okay, what businesses can we own while keeping the W-2 with a strategic plan over the next 12 or 24 months to get to a point where we have X amount in reserves, right? 6 to 12 months of reserves, and we have X amount of revenue coming in compared to our current salary. Because then we can help people transition smoothly. Because everybody has different responsibilities and risk levels. I understand that. But I'm not sure I'm going to ever do that program again. But if you want to learn more about the program, just go to that link that's on the screen right now. And I would suggest checking that out.
Meet Bo Eckstein, the driving force behind Business Ownership Coach, unlocking the path to business ownership. Visit www.businessownershipcoach.com. Thrive with Business Ownership Coach.
Ritesh asks, do you have funding for a steady up SaaS fitness app that launched 3 months ago with no cash flow?
That's going to be a challenging one. So you have a startup. Like I would have probably done that tried to do SBA financing as a startup as opposed to like a lot of people are like, hey, I'm going to bootstrap this business. You might is it possible to get SBA financing? So yeah, you could probably look at getting SBA financing. It seems like an eligible. So you would need a very detailed business plan, projections for the first 3 years, with the first 2 years broken out month by month, and then sources and uses, a resume, and then hopefully you have solid financials and a little bit of money to put in the deal. Then yes, it is possible.
What is kind of like the typical interest rate for an SBA 7A loan right now?
With no real estate involved, 10-year term, it's based on Wall Street Journal Prime plus a margin. The margins can go as high as 3%. So Prime's at 7.5. So 7.5 plus 3 is the highest the rate can be. If it's a superb deal, you can oftentimes get a margin lower, like in the 1 range to 1.75 is considered pretty good. So it'd be Prime plus 1.75. Your rate adjusts with Wall Street Journal Prime. Now, if there's real estate involved, we have fixed rate options that are more prevalent, and we can do much better because the banks obviously like real estate deals because they're more secure, thus default rates, and they have, if the deal goes bad, they have the real estate as collateral. You can get fixed rate options in the 7s right now on that type of product. But generally, most 7A loans are based on Wall Street Journal Prime plus margin. Majority of them you'll see between 1.75 to 2.5 as far as margins, but they vary depending on the hair of the deal and the strength of the borrower. The cleaner the deal and the stronger the borrower, the better the margin you get. On the 504 loan, which is 2 loans, it's a first and second. The second, the debenture rate on the second is 6.24, and the senior debt, or the first loan is, and that's all for commercial real estate type deals, is going to be negotiated at the bank level. We also do construction financing where there's interim or short-term debt, and then once you got a certificate of occupancy, then it rolls into fixed rate options. So there's a lot of ways of structuring, but in general, it's on a SBA 7A loan, it's Wall Street Journal Prime plus margin.
What is the average processing time for an SBA loan?
Average time is for a small startup franchise, sub 150 loan amounts. We get those done in 3 to 4 weeks. For the majority of other franchise deals, it takes about 60 days. Business acquisitions, about 60 days. Sometimes if there's real estate and appraisals with real estate deals, it might take 90 days. 504 deals are usually about 90 days to 120 days. But generally 60 days or less.
Beyond credit score and financial history, what other factors do lenders consider when evaluating these SBA loan applications?
So if it's a startup and you have no industry experience in a high risk type of industry, like a high default risk, like restaurants, if you come from, you're a tech worker and you've never worked in hospitality or restaurants, that's considered more of a high risk for a startup. Not to say we can't do it because, like I said, I've been told no 5 times on the same deal and I took it to another bank and they said yes. Just those are things I would look for. If you're buying a hotel for 10 million bucks and you've never run a hotel or have any hospitality experience, some banks are a little skittish on that. It's not in the guidelines, but all banks overlay the SBA guidelines and they use what they call prudent lending. So what I do very well is I know which banks will do what and how to move the needles and how to position the deal in the right way to get it funded. So, most people they go, oh, I'm going to go to my local bank. They're not a preferred lender for SBA. They don't know what the banker you're working with is not a expert in SBA, and you get declined and you get frustrated. Most of the bankers we work with are the direct lenders, the PLPs, and all they do all day long is do SBA. That's all they do. They don't do anything else. So that's the type of people you want to work with when you're getting the deal done. And then, to put gasoline on that, work with myself or my team or any competent SBA loan advisor. And we're going to know what banks are doing what, because you could bring the same deal to a bank today and they want to do it. Tomorrow they say, no, we don't want any more motels in our portfolio because we have a saturation. So we keep our, we keep our eyes on the pulse, and we're always going to events and meeting different bankers. Guidelines are changing. The SOP or the guidelines of the SBA are always changing. So we just learn to navigate when those changes occur. Like there was just a big change. Now, before you could have anybody as a investor in the deal under 20% or whatever, or up to 49%. So they didn't have to be, right now you have to be a US citizen or a permanent resident of the United States. Before, I could have had an investor from Mexico as a part owner, for example, that was not a US citizen or a permanent resident. Not anymore. So we just had a deal that wasn't mine. It was a guy at the conference. He's a non-bank lender. And one of his deals was a $5 million business acquisition. One of the investors was going to own like 2% of the business, was not a US citizen or a permanent resident. They had to get him out of the equation now. So that actually kind of blew up. I don't really like that. I mean, I want to bring investor capital from anybody who wants to invest in my business. But anyways, that's causing some disruption. The good news is that we're capped at 5 million right now with the 7A. Now, granted, push that aside, I can do big deals with the 504 because it's the first and second. We can do $20 million deals. But on a 7A, we're capped at 5 million. But that is going to move, I believe, to at least 7.5 million, hopefully 10 million in the next 12 months. And that's going to open up because there's a lot of businesses that are 10, 12, $15 million that are not the big private equity companies aren't really looking at, and they're kind of too big for SBA right now. That's going to open up the floodgates as well. But look, SBA is here to help anybody. I always tell this story every webinar I do. I helped a guy get into a painting franchise. It was a startup. Total startup cost was 120 grand. He got into that business with 12,000 out of pocket, had working capital built in the loan. So there's a business for everyone. So don't feel overwhelmed about $5 million businesses. You start with what I like to do is get you in the game. If that means we get you into a vending business, which is SBA financeable, the ones we work with, let's get you into the game so we can start building up cash flow and then build a plan to get you out of, if you want. Some people love their jobs, love their corporate world. But a lot of you that I've talked to hundreds and hundreds of people every year. Actually, probably over 1,000 now, every single year. Majority of people want to build their own legacy, not only for themselves, for their family. So that's really what our mission is, to help those people. And we also help people that are high paid W-2. They're making 500-600 grand a year, have no tax write-offs. The best tax strategies out there is for somebody to own a business, because you can write off so much, and you can set up self-directed retirement vehicles. So I think, just opening your mind to that is huge. Wherever you are, whether you're a person that's making 50 or 60 grand a year as a school teacher, and you're living paycheck to paycheck, Let's get you in the game. There's a lot of franchise models under $100,000 all in investment that we can get you in. So don't feel overwhelmed because you're not that far off. Keep the credit good. As long as your credit score is good, you have outside income. That's what SBA is all about, helping everybody. And so, and then you buy your first business and you scale it up, right? You can get 100% expansion financing. Down the road, you can buy a building and get 100% financing for. So really, the sky's the limit. It just takes the first thing that needs to be done is you need to commit to yourself that you're going to take the time to really look for a business that would best align with you. I would recommend working with our team because we're going to give you the profile business assessment. We're going to take you through that. But anyway, I don't have to beat the drums anymore. What I would recommend, if this is intriguing to you, is to come to the workshop we're doing, where the link is in the chat right now. Go to that. See if you want to come into it, join our cohort that we're starting in the next couple of weeks, and then we go from there. That's would be my next recommendation. If you have immediate needs, you can feel free to get on my calendar if you have a deal in process and you're looking to fund it, or if you need some expansion capital.
When scaling a family childcare home service without an MBA on the resume, is it possible to be approved for an SBA expansion loan?
An MBA on the resume doesn't I didn't go to college, first of all. I went to my own college. I have my own curriculum, and so the answer is you don't need a high school education to get an SBA loan. Do you have good credit? Do you have all the other factors? Then yes. So yeah, I mean, a college degree, I mean, you need schooling for certain trades, that's for sure. Like if you're going to go to medical school or you're going to do, you're going to be a CPA or you're going to do this or that. But in general, a lot of the most successful entrepreneurs weren't very good students, right? So you don't need an MBA. It helps though, I've talked to people that have gone to MIT and Wharton and all that stuff. And yeah, they're on a whole nother level of smarts, but to be a good business owner, it's really about, can you learn? Can you follow systems? Can you stay consistent? So if you have good credit and you have outside income that supports outside debts and you have a good business plan, then yes, you can get SBA financing. The problem is I get a lot of people that have booked calls in the past with me and like, oh, they want SBA financing. What's your credit score? It's 580. Well, it's not going to help. So if you have bad credit right now, I can't give you any other advice than figure out what's on your credit, learn about utilization, and learn to keep your credit golden. Now, if you got enough cash, you don't need personal credit anymore. But unfortunately, I always need credit. So I would imagine most people on this Zoom right now treat your personal credit like gold right now, because being able to leverage bank loans and working capital is going to help you really get you to where you want to go, to get you into that piece of real estate, to get you into the business, to get you to buy that dumpster so you can start a dumpster business. So I'm a big proponent to get the vending machines, right? So if you have the good credit, if not, there's nothing I can do right now to help you other than tell you to go get your credit in check. And then, if you're working right now, even if you're not making that much money, take a portion of that, even that's 10%, put it away on the side. Start saving up a few $1,000s. Now your credit's 680 and better. You have low utilization on your credit report, and now you have $10,000 or $15,000 of savings, or you have a family member that's going to partner with you. You've got the capital. Now you're ready to go get into an entry-level franchise or business. And there are business models out there for 60 or 70,000, and we can finance them with SBA, and you need 6 or 7 grand to close. Now the banks, it's nice if you not putting your last $7,000 into the deal, but if you had a little bit of additional liquidity in your bank. But yeah, I think the most important thing is having the reserves. Like I have peace of mind because if my cash reserves run low, which oftentimes they do, because I'm investing in different things, and all of a sudden I'm like, oh, I'm a little bit low. But I have built a couple $100,000 of available credit, so I never stress like I used to before. That's going back to when I was flipping that house in Northern California, and the construction budget was $70,000 more than I anticipated, and I didn't have that. So I was charging it up on my personal credit cards and my scores dropped. You always want to keep the credit high so you have options. Like people, when you have good credit, what do they want to do? When you have good credit and you look good on paper, people want to give you money. When you look bad, they don't. So you want to look you want to get to the point so you look that good. So anytime you're getting the credit card offers for your business credit cards where they're giving you the 12 or 18 months with zero interest accrued, right? Like those are options. Then you can use that and leverage it in a good way. Obviously, don't go buy stuff you're not going to use for the business, but understanding the credit game is so important. And like I had in 2007, I devastated my credit, like devastated. That was, I don't know if you guys, how old you guys are, but I was in real estate at a young age and I got really hurt and my credit took like a huge pounding. I mean, probably as bad as you can get. It like I kind of buried my head in the sand, but I finally fixed it and I like will vow to keep it in good shape forever now. I mean, that was a terrible time. The economy collapsed, and I was heavily invested in real estate and I didn't know what I was doing too. That's another thing. Um, so I really value having good credit and to understand like the SBA game and how to use credit and all this stuff. It really is the ultimate way to take somebody who is, an average middle class or low middle class person and build them up so they can start getting assets, getting cash flow. It's really a phenomenal program. And I oftentimes have people from other countries calling for different, business opportunities or for conversations. And most countries don't have a great program like SBA. So it is a federally guaranteed loan program. They guarantee a certain portion of the loan. And it really is a game changer if you can use it in the right way. So anyway, I hope you enjoyed that. I got to do these as meetups because I hate just looking at myself on the screen and talking, but I hope you got some value out of it. We're always doing things, but I would encourage you to come to our event that's happening April 3rd. That would be the next step for you, and I hope to work with you here in the future. Thanks, everyone. We'll see you on the next one. Bye-bye.
If you're looking to acquire a business, stop scrolling on Biz Buy Sell and visit franchiseresellelistings.com. We'll do a customized search. You can get on our weekly distribution where we're sending new inventory weekly to your inbox. So visit franchiseresellelistings.com and opt in today. See you there. Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.